Hello, everyone, and welcome to the Bitcoin 2.0 blockchain and cryptocurrency webinar. So glad to have you here. My name is Nako Mbele, and I'm the owner of Fintech Recruiters. The reason I decided to have this webinar is we get a lot of emails, calls from candidates in financial services who are really interested in entering the Bitcoin blockchain Ethereum space. They don't know much about it. They hear lots of buzzwords and they really want to get an overview. So this is the reason we're having this webinar. And we've invited Ryan Molecke. Am I saying your name correctly, Ryan?
Molecke.
Molecke, my apologies. So Ryan Molecke is a blockchain expert, and he's going to discuss with us the overall space. He's going to explain what the buzzwords mean. So Ryan Molecke is from Ledger. So tell us a little bit about yourself, Ryan.
Yeah, sure. Okay, so I've been in the blockchain world for a little while. I've been through several startups. I came out of computational science research background, and I have a PhD in nanoscience. So, very nerdy kind of guy. I've been working in blockchain for about 4 years now. I started with a Swiss startup called Monetas, and I went over so I spent about a year there. I spent about a year at Shapeshift as the lead developer of Shapeshift. One of the lead developers. And then I founded my own cryptocurrency exchange, and they are now a remittance-focused company called Bridge 21. We went through the Techstars Accelerator, which was super exciting, and now I'm working in blockchain energy technology. I got into this energy-efficient, socially positive, beneficial blockchain movement, and we started this company called Ledger. And so now we're about to launch Energy Chain and the Energy Efficiency Token. So that's my story. And yes.
Great. Well, it's so good to have you. And for those of you who aren't from the space, the companies that he's named are pretty much bedrocks. I mean, Shapeshift in particular is a bedrock of the community. So you're going to be...
And Monetas too, was one
yes.
of the original Crypto Valley companies from Zug, and they're still going. They still have apps coming out and stuff.
Yeah, great. So definitely you've got some solid experience, and we're really happy you took time out to speak with us. Okay, so let's talk about what we're going to be discussing. What's on the agenda? What can people expect from this webinar?
Exactly. Okay, so we're going to start with sort of the Bitcoin 2.0 blockchain, Ethereum. We're going to talk about sort of the differences between Bitcoin and Ethereum, and sort of how the Ethereum Foundation got set up, and a little bit about smart contracts. We're going to talk about blockchains without asset classes and sort of the competing economic theories of the different blockchains out there. And then we're going to expand on all the different sort of competing blockchains that are out there a little bit, like the new ICOs that are coming out, like Tezos and NEM and EOS and Bancor and all these crazy ICOs that are coming out, the ICO frenzy. So we'll cover the top 10 sort of most recent ICOs. And then we'll kind of go into the sort of trading aspect of financial analysis and trading analysis, how to spot good and bad ICOs and blockchain scams, or protecting yourself from the hype, or being able to spot the hype. And then sort of my personal trading strategies about how not to lose money. And then we're going to go into, just sort of the cool new projects that you and I personally are interested in, what we like about them and what's cool about them. And then we'll just sort of wrap up and say what we said.
Great. Lovely. Sounds exciting. I'm excited. Okay. So let's start with, what's the difference between Bitcoin, Ethereum, and there are two Ethereums. So
yes.
What's the difference?
I want to talk about that.
Yeah.
Bitcoin, yeah, of course. I got into Bitcoin in early 2010, which made me one of the very earliest sort of early adopters. So it's been around for almost 8 years, or 8 years now, almost 8 years now. So, Bitcoin has this proof of work mining algorithm, proof of work, where there's this energy burn. When Ethereum came out, they were sort of looking for something more like Litecoin, where it's ASIC resistant. And they do have a very ASIC resistant proof of work algorithm right now. I believe that there are no Ethereum ASICs out there. So it's more GPU mining for Ethereum.
Mhm.
And they're actually in the process of transitioning now over to a proof of stake model, so that they can get rid of the energy burn in Ethereum. So whereas Bitcoin probably will never change the mining algorithm, because that's sort of set in stone in what Bitcoin is at its core. Um, and Ethereum was sort of the first, when it kind of came out, when these first graphene and Ethereum came out, they were considered Bitcoin 2.0. And it wasn't even that back then. It wasn't even like blockchain. I think this was around 2013, 2014. And we were working in the Bitcoin 2.0 industry back then, and so now Ethereum sort of really started the whole blockchain movement.
Mhm.
And I actually had an amazing story. I actually got to go meet some of the Ethereum founders before the Ethereum token sale back in 2014, early 2014. And they have sort of a very interesting corporate structure. It's very sort of non-hierarchical, and they sort of have these different code holons, which is like this sort of cool like apartment with like all the like living areas and kitchen on the bottom floor, and like this giant like code space above where everyone just like kind of codes and games and works together. And they sort of had titles like, idea man and like thinker and like all these, it was a very non-hierarchical sort of structure at the time.
Mhm.
It was really fun. And they were self-funded before their ICO. So they were like kind of broke, and like these coders that were like super nerds. So like mad props to them for like having the faith to go through with that. And they only raised like $16 million at the time.
Only
Yeah.
imagine that
Only
was
raised 16
only
million, yeah,
only
but it was
16
amazing.
million.
It was like a ground shaking, industry changing
Yeah,
thing when
for
Ethereum
sure.
came out, because it was so new and because it had smart contracts, right? And smart contracts is this sort of programmatic language, Ethereum virtual machine bytecode, where you
Mhm.
can program these languages, these Turing complete contracts, where they can process messages and react to oracles, and basically do computation in the blockchain, on the blockchain node.
So I have a question. So a
Yeah,
lot of our viewers are not technical, right? But they have questions such as people, particularly people from payments. So in payments, there's something called distributed systems, distributed
sure.
networks, and that in fact is not the same as distributed systems in the blockchain world. So can you and sometimes there's a bit of
Right,
confusion because
right,
in the distributed systems world and payments, they are working with, I guess, various networks and payments, and they're building out APIs that can, have various feeds. But how is that
right.
different from when
Sure.
you guys talk about distributed networks? What do you mean,
The difference
distributed
is sort
systems?
of in the database and how it's handled. So in a classic distributed network, you might have a transaction database, right? And it's on a sharded Scala or Cassandra database or Oracle database somewhere, right? And but this database is sharded, right? It's distributed over many corporate network, hardened backups, offsite backups, and everything, right? So it is distributed in that sense, and they do even have consensus algorithms within those systems. And
Okay.
you know, to if there's a parity error, it can correct it, or if one of the nodes' data gets corrupted, it can fix that, right? And there's redundancy built in those systems, and they're like distributed hash tables or IPFS, Internet Protocol File Transfer System or whatever. These are all like sort of redundant, sharded database systems, right?
Okay.
What the real big change is in the blockchain Merkle hash tables, so that there's a state that has to be sort of approved, and every node has to come to consensus about the state of the blockchain and this hash at checkpoints. So that when transactions go through, they get sort of cached up and then processed in batches, and every node has this cryptographic proof of what transactions went through, and they can prove the state of the blockchain at every point along the way, and the timestamp of every state change, right?
Okay.
So that gives it this data immutability that traditional sharded databases don't have. And it gives it this immutable time stamping mechanism. And there's also trade-back. There's also trade-offs for that. For example, in a blockchain system, it's hard to delete data. Like the blockchain will continue to grow without bound, right? So there are some blockchains that sort of try to address that and have deletion mechanisms. But that's actually a really good point. Because with Ethereum, Ethereum. One of the things that's happening right now I want to talk about is sort of the cost of using the Ethereum mainnet. And because Ethereum is sort of this big public blockchain, right, where everyone can sort of process their transactions, can kind of consider it as if you had an Oracle database that everyone in the world could access and use, right? And it's just public. Anyone can download the database and serve it and possibly make a little bit of money for serving it. But it's like one big giant public database, right? And there's so much data in the world that the amount of data that can be stored in this giant public database is going to be self-limiting. It's going to become more and more expensive, right? And one of the issues that they're talking about right now is blockchain rent, right? Because right now, if I notarize some data on the Ethereum blockchain, I pay, right now it costs somewhere between half a cent and a cent per bit to store data or to change states of data on the blockchain in Ethereum mainnet. So that's extremely expensive. Okay, I kind of lost my train of thought there.
That's okay. I have a question. Okay. So if there are two Ethereums, okay, yes, so if you go and you'll see Ethereum Classic and Ethereum, and I mean, we could be really very short about it in terms of why those two exist, and it's because there was a DAO compromise, let's call it that, because people don't like to use the word hack, and one of the Ethereum chains decided to what's the word, divert or to fork.
Hard fork.
Exactly, yes. To hard fork, and the other decided to stay along the principles of the blockchain and not
that goes back to sort of this idea that all these contracts are running on a big public chain, right? So what happened was there was a smart contract that can interact with another smart contract through messaging. Is called a decentralized autonomous organization. A decentralized autonomous organization, a DAO. So, a lot of these smart contracts like Bancor, Tezos, these are smart, actually Tezos isn't, EOS right now is a smart contract. A lot of these, what they're calling them EC20 Ethereum currency asset classes are smart contracts that can talk to other smart contracts and receive messages and take actions, and that's a decentralized autonomous organization. So what happened was the DAO was sort of the big first one that came out, and they raised all this money, and it was supposed to be this way for people to fund development projects, and they were going to have like a voting mechanism where you could allocate money to one development project or another, and they could have checkpoints and all this. But what happened was that there was a bug in the transaction code. But they raised like $200 million, some crazy number like that. But there was a bug in the code, and it wasn't discovered until it was basically too late. And the people who should have taken action didn't act fast enough, well, let's just say it was kind of a mess up. And and it was a bug called the reentrancy bug, where someone could actually attack it and drain money out of this smart contract by attacking it. But it took some time because of the way it was built. It had like this sort of safeguard where it was going to take them like 10 to 14 days to be able to get the money out. So it became this like hacker war over like the people trying to stop the money from being drained. And like what happened was the Ethereum Foundation, I want to talk about that because it's actually a nonprofit foundation based in Switzerland. These guys decided that they were going to try to convince all the nodes to roll back this DAO contract and roll back those transactions, which means people would actually lose money, and exchange transactions, that had gone through exchanges could be reversed and stuff like that. A lot of some of the community balked at that idea. And they were like, well, this is centralized control. And even though that there was this big mess up, that's the rules of the that's the rules of the game. That's the rules of the smart contract. And you lost. And so we're just going to let this hacker have his money. And so there was a big split in the community over that. And so some of the nodes actually decided that they were not going to reverse these transactions. They were just going to keep going. And some of the nodes decided that they were going to reverse those transactions. So the chains diverged. And normally what would happen in that situation is the minor party, like the smaller party, usually would not have enough hash power to keep mining blocks in a proof of work system. Because if they say they only get 5% of that mining hash power, it's going to now take them 20 times as long to find each block until the hash power difficulty corrects on that chain, right? Mm-hmm. So basically it's really hard to hard fork and succeed as a minority chain in a proof of work system, especially. So, and there's another, that actually kind of brings us to Tezos too, which is one of the new ICOs that just came out, because Tezos is very, very similar to Ethereum, but they have this sort of consensus algorithm for how to handle hard forks. And it's specifically because of the DAO, they said like, okay, well, the next time that something like this happens, we're going to have a community vote in the Tezos network. We're going to have a community vote over such things, and the community vote is going to decide which way we go, so that there's not a split like that.
Yeah. It's kind of like Dash, right? It's sort of like you had mentioned earlier, I think before in one of our conversations, it's a little like Dash, sort of Dash and Ethereum in between. Like yeah. And that's one thing I love about this community is people they learn from other people's mistakes, and then they'll build it into their solution, which is great.
Dash is coming along. Dash started out as Darkcoin because it had anonymity. And then they rebranded to like make it more user friendly, but it does still have this sort of strongly anonymous feature. Then there's another one that came out called Zcoin, Zero Cash or Zcoin, and those feature what are called zero knowledge proof systems, which enables you to sort of do these computational, sort of be able to participate in computations without knowing what the computational problem at hand is, essentially, and get paid for that. But one of the problems with those systems is that they're so strongly cryptographically anonymous that you can't even verify the amount of coins that exist, or like the fact that the central asset issuer is not inflating the token supply. So that's a difficulty with, once you get these things into such a black box that you can't peer into the inside, right?
Yeah, definitely.
So, but I did want to talk about this. The basic setup of the Ethereum Foundation is kind of interesting because it's a nonprofit, and they sold all these tokens, right? And they took in Bitcoins at the time. I don't know if they also took in wire transfers, but they sold all these tokens, $16 million worth, and they're a nonprofit. So they theoretically they're going to burn down through these tokens, right? And then they'll be dependent on like the freeware volunteer community for development support.
Like Linux, right? Like
yeah, similar to Linux. But what happened was that the Ethereum tokens went up in value so crazy that they're now like the richest blockchain company on earth. So they have a market cap, or they have a personal like war chest of the Ethereum Foundation has a war chest of like hundreds of millions of dollars because of what happened with the token price. So that worked out for them, but it's, you can't really start a project with the idea that your token is going to go to $500 per token, right? But good for them that it worked out for them.
Well, that's the idea these days, though. I think that's exactly what people are thinking, but that's okay.
Well, let's talk about that. We'll talk about that. We'll get into that. One thing I do want to talk about is the determinism. There is this, in smart contracts, there's this, a lot of people don't understand the need for determinism in smart contracts, or this whole Oracle thing, right?
Yes.
And so let's just talk about that for a second, because determinism in these smart contract networks, and networks that can do computing like this, they have to have the ability to come to consensus about the state of the blockchain after the smart contract is completed. So if you can't really have like a smart contract that has a random function in it. You can't have like variable x equals random. essentially. Because what'll happen is when that smart contract is published and someone tries to interact with it on the blockchain, what'll happen is that node will get some random data that gets put into their blockchain state, right? And then when they try to send that transaction out to some other node and the other node tries to execute it and gets a different random answer, then they will no longer be able to come to consensus about the state of their blockchain and what happened in that transaction. So that's why the transactions all have to be deterministic, and the nodes, when a new block is mined and sent out to all the nodes have to be able to perform all the transactions in that block in those smart contracts that are being paid. And then they all have to be able to come to consensus about what happened in those smart contracts. Or otherwise, the network could literally halt.
Okay.
So, yeah.
So this may seem like a rookie question because I'm not technical, but how does one, because it's sort of like it means that the data, whoever is inputting the data or programming the deterministic formula or whatever you guys
Right.
call it, that's key then. So it really
Yeah.
does come back to human,
Right,
error.
there is a human element in it. And for
Yeah.
example, like say you can't program a smart contract that says like X equals a coin, flip this coin and send money to one or the other party based on the outcome, right? But
Okay.
you can have an oracle flip the coin for you. So you can basically write a smart contract that says, go and ask this oracle to flip a coin for us and read the results of that coin flip. And then, so the oracle, what will happen is you have an oracle somewhere, and they're flipping the coin, and then they write to the smart contract, I flipped this coin, and the result was heads, right? And so they have officiated something in the real world that happened into a blockchain, and you trust them as the official that said that this thing really happened. And then you query their smart contract and said, okay, what was the result of this coin flip? And so that data is on the blockchain forever now, the result of that coin flip. So anyone that wants to come and now download the Ethereum blockchain in the future, that the result of that coin flip is now on the blockchain and forever for them, So that's sort of how oracles work. So you could have a smart contract that's dependent on something outside, like the stock market, stock price, or something. But you would have to have a trusted oracle that's writing that data to the blockchain or sending you trusted messages for you to act on, essentially.
So is the oracle a hard problem in this
No.
space?
Okay. So there's a site called Oracleize. One of the problems is that you have to sort of trust the oracle, right? And
Yeah,
there's
that's what I mean.
lying, right?
Hmm.
And so Oracleize has this sort of proof of data sort of thing that they try to include some hash signature proof that this was your request and this was the response from the data source you requested. And so they try to like wrap it up in some sort of cryptographic hashed proof system so that what is it called, to disintermediate themselves, right, from having to be trusted. So that that is a part of it.
Interesting. Interesting. Okay, lovely. And what about blockchains without asset classes and competing economic theory?
Yeah. Okay. So in the last few years, especially since the rise of blockchain, and when I started with a guy who's not really a guy my co-founder is from the energy industry. Okay, so and he's really enthusiastic about blockchains, but he hears about Hyperledger and it's super cool, and people are like, well, why don't we have a blockchain and we'll just forget all that asset token financial stuff and we'll just do cool
The
stuff with a blockchain,
speculators, the evil
right?
speculators, yeah.
Right. Exactly. And that comes down to like, I mean, it is a competing economic theory, people, there are blockchains that, for example, Bitcoin is sort of a very Austrian economic theory coin because it has essentially, it goes down to zero inflation rate and it goes down to 21 million coins and that's it, right? Eventually, that's it. So, and Satoshi Nakamoto included in the very first Bitcoin Genesis block, he included this quote about the Greek banking bailout and about how the International Monetary Fund was considering this Greek banking bailout. And it was sort of a statement about, well, we're going to do this economic experiment in Austrian economics and a hard currency that's out of control of any nation state. And that was, sort of a response, I think, to the banking bailouts and the sort of rampant neo-Keynesian economic theory that's sort of running through most central banking, government banking platforms right now. Fiat banking platforms are printing money and sort of on this sort of Keynesian wave. So, but there are also blockchains that have like a permanent 5% inflation rate. Okay, and that's like sort of more of a kind of feeds into like a Keynesian perspective that you need this asset issuance, constant asset issuance of a few percent to sort of stimulate the economy and give incentive for economic actors. So we'll see where that goes. And then there's Hyperledger, right, which is like a totally tokenless platform, and that is sort of the let's get away from monetary applications. Let's get away from these financial applications. Let's just do inventory tracking or software license management or media DRM or whatever on blockchains. And I think at that point you have to really step back and look at why do you really need data immutability, which is what you get from blockchains? Do you really need permanent time stamping? Do you really want a system where you have to remember all the data in the blockchain permanently, for your application when you start wading into a system like that? Okay.
Yeah,
we'll
yeah.
just leave it at that.
Lots of different ideas, and we're really at the beginning, the nascent stage of all of this. So it's exciting. Okay, now, did we talk about the competing protocols?
Let's
Did
get
cover
into
that a little.
that.
Okay, yeah, because that's fun.
Can I do a screen share here?
Sure. Yeah.
Let's see if I can do it.
Yeah.
Screen share. Desktop 1. That's probably the one. Okay.
Lovely.
Okay. Can you see my screen here?
Yes.
Okay. Let's look at. Okay, so I've made a chart here, and so let's just look at this chart for a minute. So I started Bitcoin, Namecoin. Let's just start with some of the older ones. So I kind of when I was trying to figure out how we were going to do energy chain and energy storage and energy processing and all this, I was looking at all these different blockchains. And I was looking at what's the consensus layer. Do they have a proof of work energy burn, or is it proof of stake, which is more energy efficient, right? And then do they support smart contracts? Do they support data storage on chain or off chain? How hard is it going to be if I want to do a demo? So that's sort of one of the considerations, of course, and just some notes on each one. So Bitcoin, of course, the original global decentralized financial ledger system. And it does actually have a scripting language. Bitcoin does have a scripting language. When you send someone a Bitcoin transaction, it's actually a scripting language that says, put this money out into the Bitcoin blockchain, and anyone that holds the private key to this address can claim it.
What's the scripting language? What is it?
Is it scripting language? Yeah.
Oh, okay. I know it was built on C++, right?
It is. Yeah. Bitcoin is built on C++. That's right. And so there is a scripting language, and so you can see, Bitcoin has rolled out some features like time lock, verify transactions, where it's like no one can spend this Bitcoin until next month or this certain block, and multi-sig transactions. Those are all implementations of the basic Bitcoin scripting language. But Bitcoin, you can't really store much data. It only has this OP return field in the transactions where you can store 80 bytes of data. And that's sort of where Factom got started, which is they're trying to do land notary, land titles and deeds and registry. And basically, or document notary, they'll take your document, and they'll take a hash of your document, your unique hash, and they'll stick it in that OP data field in the Bitcoin blockchain. That's sort of where they got started. Okay. So Namecoin was basically a clone of Bitcoin that came out early on. I actually really liked Namecoin, and I actually thought when it first came out, I thought it was going to be more valuable than Bitcoin because it's basically the exact same thing as Bitcoin, but it has this distributed DNS, which is like this internet routing, IP routing, data protocol built in. And so you can get like a .bit domain, and people can go to your .bit domain and that kind of stuff. But it never really took off as well as Bitcoin, of course. I think it's still worth a few bucks per Namecoin. Litecoin also came out, and their idea was basically to be like Bitcoin, but they wanted to be ASIC resistant. They wanted to be more decentralized. So they had this like memory hard mining algorithm that you had to. Everyone was mining with GPUs, but eventually what happened was Litecoin ASICs came. Give it long enough, and someone will figure out how to build an ASIC for that for any mining algorithm, really. So it did eventually come out, but Litecoin is still up there, and Litecoin
is doing very
recently
well.
implemented SegWit, with segregated witness, which is sort of this protocol implementation that's supposed to allow second layer like sidechain sort of transactions at a higher throughput, and they're up to like $100 or $50 to $100 per Litecoin, somewhere in there. So they're still doing well. Graphene was one of the early ones that came out sort of at the same time as Ethereum. And you've probably heard of BitUSD or BitYuan, which are asset classes that are pegged to the USD or the yuan. So one BitUSD is worth $1. Okay. These are basically, it's kind of a scripting, it's basically a clone of Bitcoin, essentially. But it does have some sort of signage and vesting and escrow sort of functionalities, so that you can basically, if the price is going down and you have this option to lock in your BitUSD or your BitShares and earn like some interest on the fact that you said that they're locked for a year or whatever, right? Mm-hmm. So it has this sort of seigniorage vesting sort of mechanism in it. And they've been out for a long time, and BitUSD is still going strong. I believe they recently fell off the peg, and BitUSD like went down to like 87 cents per BitUSD instead, where it's supposed to always be at $1. But then they came back, and now they're at $1 again. So, and there was high volume during that time, so it was probably a good trading opportunity. Okay. Lisk is another one. Oh, let's look at Ethereum. I think we've talked about Ethereum to death already. One of the interesting things about Ethereum is that it has a 14%. Right now, it has a 15% inflation rate, and there's 93 million coins out there right now. So you can do the math on that. How many coins are being generated per month or whatever, and being possibly sold in the market. It will adjust downwards to 0.3 eventually. Right now, Ethereum is huge with a $20 billion market cap. $20 billion market cap.
Yeah.
I can't fathom that.
Yeah, it's pretty crazy.
I mean, last year, the entire blockchain industry had like a $10 billion market cap. And now just one coin has 20 billion.
Yeah.
So that's crazy. And Counterparty is also another one that's very similar to Ethereum. It has a lot of the same sort of Turing complete smart contracts. I believe they actually like coded Ethereum in Counterparty, and then they coded Counterparty in Ethereum as like trying to one up each other or something like that. So Counterparty is another one that's very similar to Ethereum. It's still out there. It didn't take off in value, I think, as much as Ethereum did. Lisk is another one that I was really interested in when I first started studying Lisk, because it has proof of stake consensus, right, which is super energy efficient, which we were looking for our energy chain. Turing complete smart contracts. It even has this sort of dApp. Lisk is really cool because it has this like, you can build a dApp that runs on your own. It's like a blockchain just for your dApp, and you can like deploy it to a web server, and it's just like a web page. So it's almost like a new web, a whole new internet that's going to be, instead of being served by like HTTP servers like IP, TCP like the old days. It's, we're seeing sort of a transition to where you'll have blockchain nodes that are directly serving web applications and content, which is, like a sea change in the shift of the architecture of the entire internet, which is really wild and sort of mind-blowing. Lisk, and they're still going strong. Lisk actually recently popped up in the markets like crazy. They went up like 500% in the markets a couple weeks ago. So they're still doing well, and they're another one of these. They're also a Swiss nonprofit, so they were started in Germany, and I actually suggested to them to go to check out the Crypto Valley and this log that they went. Zug, yeah, right.
Right.
So, Medium, I thought it would be easy to work with Lisk, but they've been a little bit slow on development progress. So I'm hoping that they pick up the pace. We actually chose to go instead with Tendermint.
Yeah.
And you can see I have Ethereum and Ethereum counterpart, Ethereum and Ethereum Classic. I have listed as two different currencies now. So you can see Ethereum Classic has a $2 billion market cap. They're up like 30% today or something.
Yeah, they're
So
doing very well.
I don't know what's going on, but something's going on with Ethereum Classic. But you can see Ethereum has a $20 billion market cap, and Ethereum Classic has a $2 billion market cap.
So I have a question, because if I'm a developer, and this may be a total rookie, non-technical question, would it be less expensive for me to run my smart contracts in Ethereum Classic or Ethereum, or is it the same?
Well, it would be because the Ethereum Classic token is cheaper, right?
Right,
So the
that's
cost
what
is
I'm thinking. Yeah,
cheaper.
and it's the same technology, really. I mean, when
And
you
the
think
and
about
the block heights are about the same. In Ethereum, the cost right now is tied to this gas, and the gas cost does go down over time, but it's tied to block height. Okay, and so the block height is not going up nearly as fast as the Ethereum cost.
it, right.
So the gas cost has gone up like crazy, and it's very expensive to use Ethereum right now. Hopefully, they'll figure out how to fix that, and it'll become cheaper. But they, like I said, they have this rent problem where you can store data on the blockchain forever, right? For a one-time fee in Ethereum.
Right.
So we're going to have to see where I think we're going to see that rent issue being addressed in the future. Okay, so Tendermint is the next one. And Eris actually is a different one. I shouldn't have those listed yet. Eris is, I believe, something more with graphene. But Tendermint is another proof of stake, which is what we really like. It's a proof of stake system. So there's no energy burn, no unnecessary mining energy burn. And they have this plugin Basecoin plugin system. They actually implemented Ethereum on top of Tendermint. So you can, with Basecoin, you can do all these sort of crazy, you can re-implement Ethereum, you can do built-in Ethereum virtual machines. You can do just blockchains that have just built-in functionalities that aren't necessarily fully Turing complete, like a virtual machine. Again, it's a blockchain, so data is going to be expensive. If you want to store data in a blockchain, it's always going to probably be expensive because someone has to store that data and serve it forever, or figure out how to prune it eventually, maybe. But it's very good for notary applications. And like reputation ID systems. Development is still a little bit difficult just because it's young and there's not like a million devs who've written tutorials and stuff. But it's a very unique and valuable network. And there's this Cosmos hub that they're putting up where all the Tendermint asset class, all the Tendermint blockchains, Tendermint is like more of a blockchain building block company. And so they released Cosmos Atoms as their own blockchain, but that's just one of the Tendermint blockchains. All the Tendermint blockchains are going to live together in this big Cosmos hub network, and you're going to be able to have this inter blockchain protocol where you're going to be able to use one asset from one Tendermint blockchain on another, and possibly even support assets like Bitcoin and Ethereum in Tendermint blockchains, which is really amazing. So we actually chose to use that at NLedger. We chose to put up our energy chain on a Tendermint blockchain, and ours is a Basecoin plugin. It's a Tendermint Basecoin plugin. So it doesn't actually have a virtual machine like fully Turing complete, but it does have built-in energy industry functionalities, basically. And it's intended, so our energy chain is actually, this is actually interesting because our energy chain is intended only to notarize data about the energy industry, right? It's not like I said, like this big worldwide public blockchain where everyone can use, and it's actually a private validated network. So only our affiliates can prove transactions, right? So it's a little bit different, and it's sort of specialized, and it's only meant to store energy industry data, right? So I think you're going to see that, and we're also doing like land chain, right? So there's so much land data that you can't even have one land chain to store all the land data in the world. There would be too much data. So we're going to probably see geographical splitting, and so we're really interested in the scalability aspects of how that's going to work. But EE coin is our energy efficiency coin, and it's actually pegged to the value of an energy index price. So it's actually pegged to energy bonds and stock indexes. So it should be more stable. And our goal was to have a blockchain with an environmentally positive impact. So that's sort of where we went with energy efficiency coin. Okay, So then there's IBM Hyperledger. Okay, so there was Intel and IBM were sort of competing with two blockchains. There was Hyperledger, Fabric, Intel Ledger, Sawtooth Lake, and they all sort of merged, and now they're all Hyperledger. They all became Hyperledger. They all merged together. So, and it does have some sort of smart contractability. It has some chain code, which I haven't explored very much, or it's maybe it's a Hyperledger. Yeah, I believe it's chain code in Golang, and it is a bit proof of stake thing. So there's no energy burn in Hyperledger, which is good, and it does seem to support some sort of smart contract memory storage notary that seems all supported. It's still a little bit difficult, probably medium for me and hard for other people, and the documentation is still a little bit limited because they don't have a huge community of like open source software people that are working on Intel Ledger, Hyperledger, and writing tutorials. Most of the documentation is coming from a corporate base downhill. Okay, so do you have any questions going? Do you want to keep going?
Yeah, I do actually. So just for the non-technical people, so what we're covering now is the bottom layer of the ecosystem. Okay, these are the infrastructure guys, the guys that are literally building the pipeline and the network that's going to support the apps that you and I interface with. So
right. Each of these networks is a blockchain node network, so they all have a node implementation.
Yes, exactly. And the protocols vary according where he is highlighting. Those are the different consensus, whatever you call them, right?
Okay.
Consensus protocols. And what else did I want to ask you? I did have another question. Okay, the agnostic. Now, a lot of startups claim to be blockchain agnostic. You hear that all the time. We're blockchain agnostic. Whatever happens, we're just going to.
We were saying that at Ledger for a while.
Yeah. So, how easy is it to switch from one blockchain to the next based on where
you can't really switch your token. I mean, once you release a token or a big blockchain project, you can't really switch from one blockchain to the next. What you can do is make them interoperable so that you might be able to accept the asset class, like you might be able to accept, Lisk or Litecoin or Namecoin or Bitcoin on your blockchain asset class for payment. Or you may be able to make your smart contracts be able to communicate with Ethereum smart contracts in some way so that, one of the things that we're working with IOTA, and I should put, I don't have IOTA on here, but they're an Internet of Things blockchain, right? And they actually just raised some crazy amount of money too, like $100 million.
Oh, yes. It's IOTA.
IOTA, yep.
Yes.
Yep. And the interesting thing is they don't even have, right now, I'm not even sure that they actually have a functional working blockchain. And actually it's a tangle. But IOTA has a tangle and it's not a blockchain. And
it's not even a blockchain.
It doesn't actually have a consensus mechanism in the same way. And it's really, I'm not even sure exactly how the tangle works in terms of like hard fork situations or consensus. But they're working with Internet of Things devices, right? And they want to be super, they want to run IOTA, connect to Internet of Things devices all over the world. So one of the ways that we're working with them at Ledger, an energy chain, is possibly, maybe we can have our blockchain send messages to theirs that interacts. Maybe we can accept payment in IOTA tokens, that kind of thing. So, or maybe we can, possibly run an implementation of IOTA, a Tangle that would be like an energy chain version of the Tangle. So you can be blockchain agnostic in that sense, but I think every company sort of has to choose a base platform and run with it at some point.
Yeah, interesting. Because there are quite a few startups that have switched from Bitcoin to Ethereum, right? They've decided to transition.
And there's even this one, like EOS is one of the ones that came out recently, and they're transitioning. They're starting out as what's called an ERC20 token, which is an Ethereum token. ERC20 is a standard that Ethereum smart contract DAOs have to support the standard types of transactions to become considered an ERC20 token. And so you'll see Augur is an ERC20 token, Golem. There's another one that just is coming out this week called Salt.
Yeah, I like them.
And they're an ERC20 token. All these are ERC20 tokens, which mean they run on the Ethereum blockchain. It's basically an Ethereum smart contract asset class, right? But EOS is actually starting out as one of those, and then they're going to transition to their own blockchain class, their own blockchain later. So you'll see even Ethereum is, getting leapfrogged.
Competition, yeah.
So let's keep going. Let's keep going down the list. MIT Enigma is one I was looking at. I believe it did recently have some sort of launch event. They actually, it seems like they outsourced the consensus to the blockchain layer, and they're actually some sort of zero knowledge proof decentralized computing payment network thing that can use any blockchain. So I'm still learning about that. That's MIT Enigma, and MIT's got a lot of smart people, so they'll probably succeed. And I think they have like students that they can assign to help them and stuff like that. You know how it is in academia. So you'll probably see a lot of movement. You'll probably see this project continue to push along, and they say they can support cross-chain atomic swaps. So maybe you'll see some sidechain payments. And one thing I do like about the MIT Enigma project is that they have a sharded blockchain, which is really interesting because right now, if you want to run like a Bitcoin blockchain, if you want to run a node of Bitcoin or Ethereum, you actually have to download the entire blockchain to your computer. And Ethereum's only been running for 4 years, 4 years, and the blockchain is 200 gigabytes, right? And the Bitcoin blockchain is even bigger than that, 300 gigabytes, something like that. And so you have to have a kind of a big hard drive on your machine. It's kind of hard to run a node in the cloud if you have to have a 200 gigabyte hard drive, right? So that's with MIT Enigma, they actually have a sharded blockchain. So it's like a redundant, sort of more like a traditional sharded distributed hash table system where if you can participate and you only download and serve part of the blockchain, but there's enough redundant parts everywhere spread through the network that it doesn't go down, basically. So that's nice that you don't have to download the entire blockchain with MIT, and that's something that I would like to maybe put into Energy Chain. Okay, so multi-chain is another one that's been really popular, and I believe multi-chain is sort of similar to Hyperledger, but it does have a token. I believe it does have tokens. As far as I understand, it is sort of like a Bitcoin fork, so there's not a lot of data storage that you can do. No smart contracts yet. This may have changed. I think this one may be out of date. Okay, so, and then the newer ones. These are like the super new ones that just came out, and they're all on Ethereum, competing with Ethereum. NEM is a really interesting one, and it has this proof of importance, which is like sort of this take on proof of stake. And with NEM, so in a proof of stake network, you have to have a way of figuring out who the validators are going to be. Like, you can't just have everyone be a validator. So generally what will happen is you'll have like the people that own the most, like Lisk has a validator network. They're a proof of stake validator network. And so what they did is they have like the top 100 people that own the most Lisk or are the most involved in the Lisk for community can run the 100 validating nodes, right? In Cosmos atoms, it's just like the top. You have to own enough Cosmos atoms to be a validator, right? In Tezos, it's a little different. In NEM, it's a little different because they have this like vested harvesting sort of delegate thing going on. So you buy tokens and then you let them age. And once you have aged tokens, then you can participate in the delegate trust validating network, and you can make money if you have tokens that you've held on to for a while by participating in that consensus layer. So, and they do have some sort of support for mosaics, which is like some sort of sub-token support and token branding, and they have this apostille services, which is some sort of smart contract message dependent processing. I'm not sure if that's Turing complete or not. And I'm guessing if you want to develop on NEM right now, it's probably going to be pretty hard. just because they're not very old and they don't have a ton of developer community pushing out tutorials and answering people's questions yet, and that kind of thing. But they do seem like a pretty good blockchain platform. These mosaics and namespaces and apostille network services, we'll see. I like it. Give them the benefit of the doubt, and I like that they're energy efficient, so that's good. I might invest in them. I think they seem promising.
That's
So
one of my
Tezos,
favorites, funny enough.
yeah, I
I
like
like
them.
them.
I like them. I haven't learned a lot about them, but from what I have learned, they seem okay. Tezos is another one that came out, and they're also another one. They're competing with Ethereum directly. They have their own blockchain. It's not on the Ethereum blockchain, but they have their own virtual machine language, and it's a Turing complete, which means it can do any sort of computation possible. One thing that's cool about Tezos is that they do have .NET support and OCaml support, which are some of the newer kind of popular programming languages. .NET, of course, there's a ton of .NET developers out there. Visual Studio developers can apparently develop smart language contracts that run on Tezos. Again, it's similar to Ethereum that it's going to have, from what I understand, it's going to have a mainnet, right? It's going to be like one big public open net, similar to Ethereum. So we'll see how that goes, and it may be kind of expensive to use it. So Tezos has a permanent inflation rate of 5%, and they have this staked for consensus layers, staking layer. And one of the interesting sort of things about Tezos that I noticed is that if you're not a validating node, basically you hook up your wallet and you tell it validate and you hold coins in it, right? And then it starts participating in the consensus, okay? But if you hold your nodes like in a wallet offline or whatever, and you're not participating in the validating of new transactions, if you're not running a full node or if you're running a light wallet or something like that, then your coins, your Tezos coins, will actually be diluted.
Yeah.
They will be diluted at the inflation rate. So you'll lose 5% per year if you're not participating in the validating. If you're not running a full node, basically.
Yep.
Which is interesting about Tezos. And that gets back to that like inflation rate and whether you believe coins should have an inflation rate and all that stuff. So Augur is another one that came out kind of interesting. I kind of like Augur just because of the idea of what it is. It's a reputation. It's a decentralized prediction market with a reputation network built in. So you want to be the oracle. It's like a prediction market is where people can like bet on whether Obama is going to be the next president or whatever, right? And there's still, there'll be a 70% chance. And then if it goes the other way, then those 30% people will get double payoff or whatever, right? So it's sort of a network of smart contracts that deals with this sort of betting, prediction betting market. And so you can become an oracle because they have to trust people to tell them what the results of the bet was. Like which horse won the race. They have to trust someone to tell them that. So you can build your reputation as an oracle and make money for officiating events on the Augur network, which is kind of cool. Yeah. And it runs on Ethereum. It's an Ethereum bytecode language. So you probably can't really do much development on top of it other than being an oracle, really. But it's kind of cool. EOS is another one of these ones. EOS, like I said, we mentioned earlier, EOS is trying to, right now they're an ERC20 Ethereum-based token, but they are trying to build their own blockchain with scripts, sort of this message-based transaction processing and scripting, which I don't know if it'll be Turing complete or not, but it's some sort of data storage and smart contract. And one thing that's kind of cool, it does, I believe that EOS is supposed to have their private and public blockchains. So you might be able to do your own. It may not be just one big public blockchain like Ethereum. I'm not sure. One of the things that kind of was a red flag about EOS for me was that they're based in the Cayman Islands.
A lot of the companies seem to be either based in Singapore. I find there are a lot of Singapore-based companies, and they tend not to be based.
Well, one of the reasons that they're based in Singapore is because in Singapore, cryptocurrency securities are formally legal. So it's legal. It's formally legal to form like BCAP token is another one, blockchain capital token, and that's a token that's pegged to the value of blockchain capital's investment fund portfolio. So it's like literally a straight blockchain security to their portfolio. You know, and it's sort of interesting. Energy efficiency coin, EE coin, is similar to that in that it's a coin that's pegged to the value of energy bond and stock indexes, right? So it's like a cryptocurrency that's pegged to the value of a traditional stock and bond um, investment vehicle. So these are sort of like what I'm calling reverse ETFs. And it's interesting because
exactly.
the Ethereum ETF was actually denied, or the Bitcoin ETF was actually denied, which is like an ETF on the traditional market that's pegged to the value of Bitcoin, right? But it's much harder for regulators to deny us the ability to start a cryptocurrency that's pegged to the value of something on the traditional markets. And in Singapore, that's formally legal. So that's why you'll see that. Switzerland also, of course, Crypto Valley, you know, the mayor of Zug is like a crypto nerd. So they're all, it's pretty friendly. It's just a little bit more expensive to do business. And like they're, you know, a little bit old fashioned and more slow moving, cautious maybe in Switzerland than they are in Singapore, I would say. There's also like these accelerator sort of sandboxes going up, like London. In London, there's a sandbox where you can sort of experiment, and they kind of give you a regulatory free pass for like the first year or two, essentially. So they're trying to start, you know, incubate companies in London also by doing that.
Okay.
And there's a couple others. Golem is this supposed to be a decentralized computing network. It runs on Ethereum, and so you can like rent computing power with Golem, which is cool. Salt is another one. Salt is sort of, it's, I guess Eric Voorhees is one of the advisors there, and it's tied to AML KYC, which is anti-money laundering. So like official reputation, getting your ID like verified by the bank and the governments, so that you can be like official. And so they're trying to link that in so that they can make it easier for people to move fiat currencies in and out and have like this reputation credit score type thing is sort of what I took from learning about Salt.
Yeah, and they allow people who are holding a lot of Bitcoin to lend it out and get and you know make some money instead of just having it in your wallet, you know, sitting there. Obviously, it's accumulating, value goes up, but you may as well lend it out to people who are speculating.
Well, that's called options trading, right?
Yes.
So if you're lending it out at one, you know, if you're lending it out and you just expect to get paid back like 3% interest or something, you're probably not doing very good. You'd probably be doing better to like options trade at, you know, 5% leverage or 10% leverage or something. If you're really into the lending game, you should look into options trading for sure. So let's take a look at the market. Let's go. Yeah, I guess we'll sort of take a look at the markets and talk a little bit about it. It's such a bad week for the market.
Yeah.
It's hard to even reach this topic because I'm like so depressed right now.
But at least it's green. At least we're seeing green today. Yesterday it was
it's a good buying opportunity. When the markets are crashing and you see the red waterfalls, like buy. So it's probably a good buying opportunity. I think maybe we've hit support, but maybe not. I mean, we could see Bitcoin go down another $1,000. I could totally see that happen. It's possible. And right now, there's what's happening is this hard fork situation with SegWit. People are they're very nervous about what's going to happen with the segregated witness and whether there's going to be a fork. And if there is a fork, you might see the price. You might see it fall. You might see like Bitcoin Classic, right? And then it's like the MCAP gets split between two coins. So hopefully by August, we'll have some sort of resolution or at least partial resolution to that, and the price will stabilize a little bit. But you can see Ethereum has been just, I mean, it went down from $400 last month to $200.
Yeah.
So that's a 50%. But the cool thing is it still has a market cap of $20 billion.
Yeah.
Which is crazy. Like, so Ethereum is half as much market cap now as Bitcoin.
Yeah, isn't that crazy?
That's wild. That's wild. Okay, and Ripple is another one of the really early ones that came out. Ripple's really interesting because it actually doesn't have a blockchain. Ripple has a distributed hash table ledger, and it's a triple entry accounting system. So what's really interesting about Ripple is that in Ripple, you don't actually there's actually no Ripple node that has the complete history of Ripple transactions. and block the whole blockchain going back to like Ripple block number 0, which I found out when I actually helped implement on Ripple at Shapeshift. Ripple is really interesting because it's like it's more of like a stock system or a banking network system, and it's a triple entry accounting system. So you don't actually need like all the history of the blockchain to prove your transaction. All you need is a receipt of the last transaction that was done, and the signature. So it's signed by the node holder and the asset issuer and the person with the receipt. So it's triple entry signed. And just that receipt is enough to prove your balance. And so you can actually, Ripple is similar to Open Transactions, is another one of these systems. You can actually issue your own assets on top of Ripple. Ripple is going after banking network integration so that you can go to your bank and be like, I want to deposit $100 in Ripple USD currency and then trade it on the Ripple network. And they actually have a fully operational internal trading like order book system within the Ripple network. So Ripple is like its own big thing. And you can see Ripple has a pretty big market cap. They're number 3. I worked with one of the Ripple founders at Open Transactions. Very interesting people. They've had a lot of sort of founder splits, and you can see there's a lot of Ripple. There's 38 billion Ripples out there. 38 billion Ripple, that's a lot. Okay. So there were some founder splits actually over issuances of Ripple and the inflation rate of Ripple. Some of the founders didn't agree with what was happening there and left the organization. And they didn't agree with getting the original Ripples and like that kind of thing. So like the pre-mine situation, they call it pre-mining, when too much of the coin goes to the founders of the organization or the central organization involved, right? Litecoin, of course, they're doing okay. Okay, they're at $50. Ethereum Classic is up like crazy.
Wow. Yeah.
I don't know what's going on. I should have bought. I was like thinking about buying some Ethereum Classic last week, and I totally should have done it.
Yeah, I'm glad I picked some up actually when it was just like a little further down. Yeah, because I figured it's the same technology that didn't fork, right? So I thought, yeah, this would be a good buy, but we'll see.
It's interesting. Dash. I'm a little wary of Dash just because of the hard anonymity, and it's still probably being mainly used on darknets, and they haven't broken out of that yet.
Right.
I hope that they can, and I wish them the best. But they're doing good. Dash price is 176. That's amazing.
They are loved by the libertarian crowd.
Absolutely, of course.
They really, and their community is so strong. I mean,
they're very enthusiastic. Right? Yeah. People that love Dash, I met a guy recently who's like going across the country in a Dash van.
Yeah.
You know?
Yes.
So yeah, they're crazy. They love it.
Very cult-like.
NEM, we talked about NEM. It's one of the super new ones that just came out, right? And they, the XEM token. It's XEM token. But look at that. Like how old are they? Like less than a year old, and they have over $1 billion market cap.
I also own this, and I love it. Love. And the reason I love it is the vested harvesting portion of it. I just feel like I'm a part of something. You know, I feel like I'm participating. I don't have like a bunch of rigs, because I actually wanted to mine Ethereum, but it was just like so daunting for me. I thought there's no way. I'm not a technical person. I don't want this stuff like heating up my place, but NEM just allows me to kind of participate like that. So I love it. Love it.
Oh, that's an interesting perspective. Okay, I like that. IOTA. IOTA is incredible. They raised, it's only $500 million. I thought it was like more like a 1 or 2 billion. But they raised a ton of money, and it's a nonprofit foundation based in Norway. And we were actually approached by IOTA. I think they're kind of looking for cool projects that can help them work and build their platform. And they are even willing to help fund. If you're interested in doing something on IOTA, you should contact them because they'll fund you. You know?
Okay.
Yeah.
I like Dash. Dash has that too. You can submit a proposal, and if they like it,
there's a site like that for Ethereum too.
Yes.
Another person who's like an Ethereum millionaire in Boulder because they submitted a proposal and got some Ethereum, and then the price went up like crazy.
Yeah.
So IOTA is very cool, and they're focused again on Internet of Things, of course. And they're based in Norway. They're a nonprofit. I like them a lot.
But you'll
Monero,
notice their
okay,
denomination. Sorry, you'll notice their denomination is in the is like it's a little bigger than most of the how it's listed on the exchanges. So that can confuse a lot of people. So there's just make a note of that when
okay.
you're buying their coin. You'll notice it's like it's denoted in billions as opposed to, do you know what I mean?
Oh, okay, interesting. That's good. I'm gonna have to make a note of that and watch out for that. Because with trading systems, that kind of thing is very important.
Very, very important.
The
Yeah.
decimal places, yeah, you gotta get them right.
Yeah, you do.
Right, okay, so Monero is another one that's similar to Dash. It has some sort of anonymity. You can do anonymous transactions. It hasn't taken off quite as much as Dash, but it's out there. EOS, we talked about, is another one of these, did a big blockchain raise on Ethereum, and then they're trying to start their own. Okay, so $400 million. $400 million.
Yeah,
So let's talk about this for a second.
sure.
So, and Tezos and EOS and these, and Bancor is another one of these that raised $150 million, right? And it's an Ethereum smart contract. And so, you have to think about that. Like Bancor, maybe it's a really cool platform. Maybe it'll be really good for people. I guess it allows you to put money into escrow and then take it out and lend and that kind of stuff on top of the Ethereum platform.
Hmm.
So now, there's a couple of things that are interesting to me about these. These ICOs are sort of unproven whether they're going to be able to be valuable on top of the Ethereum platform like that, or whether they're going to be able to provide $200 million worth of value, right? And as a startup, as a startup company that wasn't running as an Ethereum token asset, a platform like this, with a good guy like Tim Draper or, who's the other one?
Well, the person who's built
No.
it is a veteran, right, from BitShares,
Right,
and
right.
and
These guys,
also,
these guys are,
mhm,
they have talent. They've got big, investment banking backers, basically, and they
mhm,
know what they're doing. They've got whole teams of developers. But a company like that that's doing like an escrow trading banking system, as a startup outside of the Bitcoin industry, not an Ethereum currency, they would be very hard. It would be very hard to raise $400 million in
yeah,
one year, right? To do that. So it sort of feels like a cash grab, and to me it does. And we talked about the cost of doing transactions on the Ethereum main network, and how Ethereum is basically one giant public global database, right? Where
mhm,
it costs almost a cent to flip one bit in
mhm,
the Ethereum blockchain, in the storage of the Ethereum blockchain. So that's a serious fee that any of these Ethereum tokens that are running in the Ethereum mainnet they're gonna have to struggle against that fee. It's a very expensive to use the Ethereum mainnet. So I'm a little skeptical. And also, let me show you something else let's get it just sort of into trading theory a little bit. I'm going to go
okay.
to Polonius.
Because I was attracted to EOS because
Uh-huh.
actually I participated in the ICO.
And EOS is one that's building their own blockchain. They're not using
Yes.
Ethereum token forever, so that's good.
Yeah, they're building their own blockchain, but what I thought was interesting, and correct me if I'm wrong, because again, I'm not technical, but
Uh-huh.
it seems like they're really solving a problem that exists right now, and that's that when you're building apps on the blockchain, there's a layer between the actual app, right, and the protocol, and so there's no
Right.
operating system. So you
Right, that is
really,
interesting. With EOS, there's
yes,
some sort of sub language
yes.
that's stored in the blockchain and can be interpreted. It's
Yeah,
more like an interpreted sublanguage, whereas in Ethereum, it's like just bytecode. You
right.
program a smart
It's
contract
like
and it
DOS.
comes down to bytecode.
Yeah,
And you could maybe decompile those, but you don't really have like the source that it came from. Yeah,
exactly. So they're actually building an operating system, pretty much,
right.
right? So that people
Well, it's sort of like it does seem to have some sort of interpreted sublanguage layer. Well, we'll see the utility of that. they seem to think it'll be very important. So
Yeah.
we'll find out.
Yeah, I'm thinking it would be for people who just don't want to. It's similar to the drag and drop website applications now, right? You can build a website. You don't really need to know how to code.
Right, and that's another thing you should be wary of with ICOs is that there are websites out there where you can literally go and be like, I'm going to start my own ICO now, name my token this, and it'll do it like all for you, and it'll be like, okay, this is how you can accept funds, and like it's all point and click now. So like you really need to like figure out if it's
If
something
it's
real with a team
yes.
behind it and a real idea and a white paper and like a
Hmm.
real project, or whether it's just some guy that like pointed and clicked and like started his own currency, right?
Well, I think there's an Ethereum useless coin, it's called, and it's like
Yeah,
a
useless
parody.
coin. Yeah,
Yeah,
that's right.
it's a
And they raised
parody,
like
but it's
four
raised
hundred
money.
thousand
Yeah,
dollars.
yeah, yeah. Yeah, I think it raised 50,000 in like a couple of hours. Like, oh
Oh
my
my God.
God.
Okay, but here's something I wanted to show you. Let's look
Hello.
at let's look at Steam.
Yes.
Everyone knows Steam, right? So this is a problem. This is a problem. Steam when Steam came out and the ICO sale happened, it was up here, right?
Hmm.
And then Steam has sort of a high inflation rate, and over time it just went down to like nothing, right? And so they sort of talked about changing their inflation rate to reduce it, and did some stuff like that, and it kind of is coming back. But this is something you got to be really careful of. This can definitely happen. You can buy tokens up here, and then when they hit the market, they just
Hmm.
slide down to nothing because they never got traction, they never got user base, or there was too high of an inflation rate or something. So that just because you bought a token at an ICO doesn't mean it's going to stay there. You got to really watch out in the early days of an ICO token. They can slide down really hard.
Well,
And
utility is important, right? You want
absolutely.
to use coins that you believe in the utility, and I
Look at
think,
Stratus. Stratus
pardon?
is the exact opposite. Started out down here, and now
Yeah,
they went crazy, right?
yeah,
So if you were an
yes,
early Stratus holder, you did really well.
yeah, yeah. I think it even beat Ethereum from what I hear in terms of
Absolutely, they probably did.
yeah,
Yeah,
yeah. They've done really, really well, and not many. Funny enough, we're talking about ICOs. Not a lot of ICOs have beaten Ethereum.
that's
Ethereum.
right.
Yeah. So
Stratus is a good one. I'm not sure.
I've
Let's go
never
back
heard
to
of
that for a second.
this.
Let's
I've
go
never
back
heard
to
of this coin.
not a, yeah. Well, it's an interesting one for a specific reason. Let's come back to that one. Where's
Okay.
that Stratus? Here.
But what I do want to tell you, people, is this is a lot of fun, regardless.
I love this kind of stuff. Looking at charts and analyzing and talking about projects I love this. Okay, so now Stratus, let's look at this. Like, so they had this big spike, right? And that, of course, if you were in early, you did really well.
Yeah.
And it came up here. And now it's sort of on this coming down, and it's sort of hard to tell, like, where the
Well,
support is, right?
well, everybody is.
So
Everybody's down.
you have to really be careful as an investor. You never really want to invest right here, like right after the spike. When if you see a big spike and then the price starting to come down, don't buy. Right?
So
Because like
hard.
you could lose all your money. You could lose like all your money. On the flip side of that, let's look at Ethereum right now.
Yeah.
Uh, it's sort of in that phase. And hopefully what we're going to see is, this is sort of what you look like, at the same time, this is sort of what you look for as a buyer, like the
Yes.
red waterfalls. Like when everyone else is panicking and screaming about losing all their money, that's when you want to be buying.
Yeah.
So if there is, maybe we hit support here, but maybe we're not going to hit support here. You kind of want to look for this uptick. But I mean, so one of my ways of not losing money by trading is I have this what I call a shock and awe trading strategy. And so when I wake up in the morning and I look at the market and I go, oh my God, what happened? Like, where did all the money go? Like when I'm in shock because the price is so low and it's everything crashing, that's when I know it's an okay time to buy.
Yeah.
And conversely, when I wake up in the morning and I'm like, oh my God, I'm gonna go like have a steak dinner because I just made $1,000 last
Yeah.
night, like then it's time to sell. It's time to take profits when you're up and
Yeah.
like you're in shock because the market just like had some green spike. Sell. That's when you
Yes.
sell. So that's,
Take some profits.
I
It's so
know
hard
it
though.
sounds so stupid,
It's
but sell after the
counterintuitive.
big green spikes and buy after the big
Yeah.
red arrows.
It's yeah, it's definitely counterintuitive, I think, for most people, right? But yeah, I'm trying to practice that, but it's so hard. It's so hard.
Let
But
me show you my trading robot site here.
okay.
So this is a trading robot that I have, and it sort of shows you sort of how I trade. Um,
Okay.
let's see.
So just to let everybody know, disclosure, this is not investment advice,
No,
okay? So
it's not. And this trading robot is not even open to the public or anything. You can't even use
yeah.
it.
So
So okay.
whenever we talk about coins that we own or that we like, it's not trading advice. Just do
Right.
your research and make sure that you make decisions based on how,
Absolutely.
how you see things and not what based on what we say. Okay, sorry, I had to say
So,
that.
but you can see I actually trade with a robot, and I don't actually like trade. I don't usually sit there and like try to time the market. I don't usually like buy when it's low or sell when it's high or even anything like that. I just have a robot literally that I set like the max price that I think it could go to and the bottom price that I think it could go to, and it just trades for me within that band. So that's really the smart way of trading is you're always holding, you're always basically trading on the return to mean theory, like the idea that if it goes up, it's probably going to come back down. And if it goes down, it's probably going to come back up. That's sort of, my robot is not predictive in any way. I don't really buy a lot into indicators. Although I do think that news and market trends do definitely affect the price and the
Mhm.
people's desire to buy. But like I trade like this, I'll usually have a band that I trade within, and I'll have like tools to auto set trades for me.
Okay.
Okay, and I wanted to talk about Nautilus because that was just another interesting one. I bought some Nautilus early on, and I was interested in the project, and I didn't do very well. I bought too high. I bought like way up here, which was
Mhm.
really a stupid idea. And one of the things that happened with Nautilus, I don't know if you remember, a couple of weeks ago there was like this rumor that Vitalik had died,
Yes.
right? And
Yes.
it was like
It
there was some
affected the
it was like
price.
scandal and it hurt the price. It hurt the price of Ethereum. I don't know, for a few hours or a day or something, the price kind of was in shock. And until it came out, he actually did this really cool proof of life on the
Yes.
blockchain, which
Yeah.
was the coolest thing ever. I love that. And then then the price came back. The Ethereum market was like, oh, he's not really dead. But what happened with Nautilus is this is run by Brian Kelly Capital Management Group. It's a coin that's made for. It's supposed to be used for brokerage, asset management, and that kind of thing.
Mhm.
Big money is supposed to move through there. It's supposed to be used as a tool for like tracking stock and that kind of thing. But what happened was one of the main guys involved in the project died.
Oh no.
Yeah, and the price did go down. The price it really affected the price because he's not involved anymore, of
Yeah.
course. The project is still they're still out there and the price has recovered from hitting the ground here. Obviously, you can see there's like a ground layer. But that you can see, you have to be wary of that, projects that have too much centralization, projects that are too dependent on one person, you know, like right now, what would happen if Vitalik really did die?
Yeah, if something happened to him, that's so true.
Right.
The pressure, I can't even imagine the pressure he's under. He handles it so well too, like amazing. But speaking of asset management
Yeah.
coins, I really am bullish on all the asset management technologies I've picked up. Well, the ones that I know, I didn't even know about this one, but like I love, Veritasium. I love Melonport. I love Economy. I love what's the other one? Mm, what's the other asset management one? But there are a couple that I really like,
Okay.
and the reason I like them is because that whole world is so broken, and you know, and they know they need something, right? So they're all waiting for these platforms to come out, and I think when they do, I think that they'll be really beneficial, and I think there's room for a lot of them. I don't think it's just going to be one dominant player. Oh, Equibit, like they're actually
Equity.
local to Toronto.
Well, one thing I really like about the Bitcoin markets and the blockchain markets is it sort of harks back to how trading was in the 70s and 80s.
Hmm.
because there are certain checkpoints that make it slower in certain ways, that it becomes much harder to do extremely high frequency trading or to race markets. So the way that now a lot of Wall Street entities are making a lot of their money by racing markets or high frequency trading, fill or kill orders, by the millions every second. And so that doesn't exist as much in Bitcoin and cryptocurrency markets. So it actually is a lot more about value investing and learning about the company you're investing in. And the trading itself it harks back a lot more to the way that markets worked in the early 80s, where order matching systems are actually, you can actually make money as a market maker in these markets.
Yeah, yeah, you definitely can. It's kind of amazing the returns. I don't think I can go back to regular.
Right.
I
No,
just
and
can't.
I've talked to people in like asset management groups, and like I told them over like in like 2013, I was telling them about how I bought Bitcoin at like $2, and now it's like like $1,000,
Oh my
and they were
gosh.
like,
What?
there's no investments in the traditional world that you can
No.
really do that.
Okay, so you were really in early. Oh man,
People, yeah,
that's
my friends were
amazing.
like laughing at me, like, "What are you talking about? These Bitcoins, like."
Look who gets to laugh, laugh.
Yeah.
Okay. Okay, great. So we've talked about ICOs and how to spot blockchain scams.
Yeah.
How
Oh,
not to.
one thing I want to mention on blockchain scams is
Yes.
you have to do some real digging. Like one of the things that I've noticed is that one of the ways that people check out for blockchain scams is like go to their Slack channel. How many users does it have? Like go to their
Yeah.
Facebook profile. Do they list that company as their place of employment? Not just checking out their GitHub. You need to check out their GitHub and like, of course, the better coder or more technical you are, the more you'll be able to make heads or tails of that. But they should at least have a GitHub profile. They should at least have a white paper. They should at least have a Slack channel and some sort of active community. Um, you know, so if you can't figure out who works for the organization, and if those people don't list the organization as their place of work, that's a red flag. For sure.
Yeah, good, good. Very good advice. Because there are a lot out there, that's for sure, and you really want to be careful.
Right.
Okay,
So
so
also some known scams. Gladia coin is a known scam.
okay.
OneCoin is a known scam.
Yes. Oh man, are they ever?
So those two, watch out for those two.
Yeah. Anything with multi-level marketing, guys. Red
Yeah.
flag, red flag. If it's
Yeah.
MLM, that then yeah, you definitely want to stay away.
Agree with
Uh,
that.
Okay, so lovely. So I think we've covered a lot. And what we'll do is in our next webinar, which we will have on Thursday, July 20th, we're going to have it live. We'll have a live Q&A, so you can join Ryan and I, and you can ask us any questions based on what you've seen. And we hope to and feel free to email me some of your questions as well. If that way we can also get an idea of what you guys are interested in, but we'd be more than happy to answer any of your questions next Thursday, July 20th at 12 noon Eastern time. And yeah, Ryan, it was such a pleasure speaking with you. It was so much fun.
Yeah.
I love this stuff, and thank you for taking time out to explain anything. Do you have any last words, any parting words for our viewers?
Just don't give up hope. Buy and hold forever.
Yes,
And
Binal. Oh, I know. You are having an ICO yourself
that's
and
right.
Ledger. Yeah, so
And
definitely
Ledger Energy
tell us.
Efficiency Coin. It's a
Yes.
new blockchain asset class with a positive environmental impact, and it will be sold at the energy index price. It's pegged to a value of stock and bond indexes, green energy stock and bond indexes. So it should be a more stable sort of coin, because it's a pegged coin, and so that is coming out in August
In
at nledger.io.
Okay, so spell it out and let people know exactly like where they can go and how they can participate. So it's
Yeah,
www.en.
EN Ledger, ENLEDGER.io. And it's
Perfect.
eCoin, symbol will be EEC. And it looks like we've already had some interest from Poloniex Exchange to list eCoin, which is great. We're finding some potential backers for our company, and we're going to do the ICO August 7th. So check for the white paper. That actually is scheduled to come out today
Okay.
at nledger.io.
Okay, perfect, perfect. And for those of you who've never participated in an ICO, there are some videos that you can watch on YouTube because it's not the easiest process if you've never participated. Once you've done one, it becomes a lot easier. But if you haven't, you're going to have to, make sure you get a My Ether wallet, and you've got to make sure that, you're
Yeah,
sending
usually
it.
you either have to send in Bitcoin or Ethereum, Ether.
Yes,
And some of the newer ones, you even have to like send Ether with like a message in the message
yes.
field. So you gotta, they'll have instructions for it. It's not that hard.
Right, right. Okay, okay. All right, lovely. So thank you again for joining us. Look forward to seeing you on July 20th with your questions. Thank you so much again, Ryan, and
Okay,
talk to you soon. Bye-bye.
okay. Bye everyone.